Okay, so today we're going to be talking about the Honest Company, ticker symbol HNST. This is a stock that is one of YouTube's stocks. What I mean by that is about 6 months ago, a really prominent financial YouTuber named Jeremy from Financial Education did a YouTube video about this stock. And he did a video saying basically there's no risk. This is the best risk reward in the market, huge upside potential. It's my second biggest holding next to Tesla, which I bought at $45. And if I bought Tesla at $45, I'd gloat about it too. But he was kind of using that to kind of say that he's so good and you should buy this stock too. And so it worked. Everyone started talking about the Honest Company. YouTubers started making videos about why it's super a really great investment, and they started writing on his coattails. And then other YouTubers started making videos that maybe it's a little overvalued. But anyways, that was at about $9. And Jeremy was by himself, because he has a massive following who all invest, was able to push it from $9 to $11. One of the things that Jeremy said was, because I didn't get a lot from his video, but one of the things he said is there's absolutely no risk because one of their main products is diapers, and diapers do really well in times of recession. But there's always company-specific risk. Even if a company has good situations and a good scenario, they can underperform. So that's not true. But either way, the stock went from $9 to $11. And then there came the huge crash of unprofitable companies where the Fed talked about raising their interest rates, their plan for that. And then every unprofitable company just absolutely got destroyed. And so the Honest Company was no exception, and they tanked from $11 to $5. They've now rebounded a little to $6. But it has just been crazy, and I think a little too much of a destruction for this company. And I'll talk about why. Well, the main reason why is because there's two types of unprofitable businesses. There's a type of unprofitable business, which is the one that is meant to be the target of the focus, but investors aren't really good enough at distinguishing between the two, so they all just got hit. But the first type, the one that really should be falling from this news of rate hikes, is the one that needs to raise more money to stay in business, right? So that's the type of company that either has to issue more shares, which is dilution, which shareholders hate, or taking on more debt, which is now more expensive. So there's kind of this perception of companies just kind of draining out their money. That's not actually true because it's not that much more expensive, but I mean, it was just blown out of proportion and people got really afraid of that idea. So they all just kind of panicked and sold from these unprofitable businesses. The second type of unprofitable business is the unprofitable business that doesn't need to raise more money. They're in a good position financially. They have enough cash to last them until they're profitable. That's the type of business that is, from an investing standpoint, the exact same as a profitable company. There is no difference. A company that will be profitable and doesn't need to raise more money until then is the same as a profitable business. No distinction. So it doesn't make sense for those types of businesses to get hit as if they're unprofitable and need to raise more money. So I'm going to talk about why the Honest is the latter, and they're a company that does not need to raise more money, and why on Thursday they're going to outline their plan, and it's going to be extremely apparent to Wall Street that they are not an unprofitable company for much longer and they don't need to raise more money. And when that happens, retail is going to enter back in and we're going to see a massive influx in the share price. And I think it's going to go to $9. I think by the end of this week, it'll be at $9, which is a 50% increase. That's not terrible. And I think from there starts the question of, okay, is this really a good investment? And I think it's yes, and it has much more room to grow in the short term. So that is kind of my thesis. So I'm going to jump into the actual company now. Okay, so the Honest Company has three lines of products. They have their diaper business, which is for babies, obviously. They don't have adult diapers, at least not yet. Then they have their beauty business, which is like makeup and mascara. And then they have their kind of COVID cleaning business, which is like sanitizing wipes and soap. That one has really spiked in 2020 and has been going downhill very quickly because of COVID, but it's not their biggest business, so it's okay. Because COVID's kind of been declining, so people haven't been buying that stuff as much. Where in 2020 it was just absolutely insane how much people were buying. Like we were just buying out everything that could clean. Anything that said disinfectant was just sold out. But their two biggest products are the diapers and their beauty lines. And so I'm going to talk about their 2021 strategy. All right. So their 2021 strategy has been very simple. It's been free trial mode, especially on their beauty products. Okay, so we saw the diapers grow. The diapers grew 16.3% in the third quarter. That's fine. The diapers are on a really nice growth rate. They're doing really well. They just released these clean conscious diapers, and people are really liking these diapers, and that's going to continue to grow. Where I love this business, this company, I love the beauty. I think there's a huge potential here. And so in 2021, they did their free trial mode. And by free trial mode, I mean their price was just so cheap to buy their beauty products like their makeup. So there's a price range that a company has. There's the high end of the price range and there's the low end of the price range. If stuff like inflation happens and supply costs go up because of like transportation issues and supply chain shortages, well then companies move their products to kind of like the higher end of the cost to kind of make up for that in revenue. But if they kind of have some room to they have room where they don't need as much revenue as quickly, and they have room to kind of just like grow their customer base. They lower their price, they do sales and discounts, and they do the lower end of their price range. Now, where Honest has been in the beauty category is below the lower end of their price range, all the way down here. I don't know if you can see it, but way down below in the free trial range. And so they've just been doing a free trial. That's it. It's been so cheap. It's under their low range for where their price should be. And so they've been doing that simply to take market share. That's been their only goal of 2021. Increase their store, the amount of stores they're in, which they've done a tremendous job of doing. They increased, they're now in the third quarter, they added 400 Target stores, which is up 30% for the amount of Target stores they're in. And then they added 7 items in 3,000 Walgreens in the fourth quarter, and that went well. So they're going to be adding an additional 15 items in those Walgreens. So Walgreens is kind of revamping its beauty category, and so their Honest is at the forefront of that. I mean, they're like half of the beauty aisle for Walgreens, which is massive. And so they've been doing all of this, and so their revenue for beauty has grown 28% this quarter, in the third quarter, and that's on the free trial mode. So they've grown their market share over the past year by 24% versus the average in the industry of 14%. So there's that 10% that they're doing better than the industry average. So they're taking a ton of that's like a kind of difficult statistic to measure, but it's like really important when you also take into account that their household penetration grew over 10% to 3.5% of American households that are using their products. It's just like, it's massive. So they've really had a successful 2021 because they have $90 million in cash and no debt. So their strategy, and so for the third quarter, they lost $5 million. And that's fine. Their strategy was not to make money in the third quarter. Their strategy was to increase that household penetration and to grow their market share, which they did a great job of. So they executed their strategy. They did what they were supposed to do, and the share price plummeted because people don't see them as profitable today. But 2022, they're moving their price to the low end of the price range from the free trial, or as I like to call free trial. It's not actually a free trial. It still costs money. It's just very cheap. And so the beauty is, well, they only were $5 million in the hole for the third quarter, but now they're substantially increasing their prices as they're in so many more Walgreens and Targets, and as their products have taken on a life of their own, and people are really starting to use their products and then coming back for more because they like their products, right? The makeup industry is such a loyal consumer base. I remember in high school, high school girls who are using their makeup products don't, for the most part, use their own money. They use their parents' money. So a price increase, they don't really care. They just want what makes them look the best. When I was in high school, there was this toothpaste that my dad was using, and it's supposed to make your smile brighter. And I used it once. He let me try it, and that was a big mistake because I thought there was like a twinkle in my smile. I thought I had a better smile. So I ordered this thing with his credit card, of course, in the boatloads. I would just be dumping this shit down the sink. No, but it was like the price of pure liquid gold. It was crazy, and I didn't care. It wasn't my money. It made me look better, in my opinion. It probably didn't do anything as opposed to like a Colgate, but that's fine. And so the point is, this price increase is still going to make it price pretty competitively, pretty on the cheaper side. They still have room to increase that price, but it's going to do something very simple. It's going to take the revenue that they have been seeing and increase the top line, and that top line increase isn't going to be associated with any costs. They're just increasing the cost of their product, and so that top line revenue increase, which is going to be pretty substantial, is going to flow all the way straight, skipping the rest of the income statement, to the net income. And so I think we're going to see them become profitable very quickly, and it's all going to start on Thursday because they're one of the last companies to talk about their and release their fourth quarter earnings. And in business, the last companies that release the fourth quarter earnings are also the first companies to release the projections for the next quarter, which is the first quarter. That's the quarter they really increase their prices. And that is the quarter where we're going to see this clear path to profitability because there's only 5 days left in that quarter, right? The March is about to end. There's only 5 days left where they don't know what could happen. So they pretty much know they know for a fact their fourth quarter results, and then they pretty much know at least 3/4 of their first quarter results. So they're going to be the first company to tell us about their first quarter, and they're going to give us, I hope, their 2022 projections, which will take them to profitability. I am really hoping, but either way, I think it's going to be a really, really good earnings report, and we're going to see some big time potential. So don't just look at the fourth quarter, but look at those 2022 first quarter projections and the projections for the rest of 2022 as a whole. So just taking a quick look at the income statement for the third quarter. I covered a lot of it, but we saw beauty grow 28%, and that's in free trial mode, right? We're going to see a lot of increases from there once they raise their prices. And then we saw diapers grow pretty steadily at 16.3%. They're doing some cost initiatives that's going to decrease the cost of their diapers, which will increase gross margin, which is awesome. And then we saw overall for the quarter a 6% revenue increase with their household and wellness, which is their COVID-related products, losing $9 million. So they lost $9 million because, it was inflated because of COVID in 2020, and they still saw an increase of 6%. I think this is a very safe investment going forward. The Walgreens and the Targets are about to kick in these big deals. We're about to see it unfold tomorrow, and that's the great thing because it's Wednesday for me today. The great thing is we're going to see it all unfold literally tomorrow. All this stuff is going to come to play tomorrow. So I think we're going to see a 50% increase in price. I tried to keep this video short, but let me know what you think in the comments down below. And yeah, take care. Let's see what happens. And good luck.